So a lot of the record earnings that you see at Canadian banks are actually because of credit loss provisions being reduced and then that money being took and put into their earnings. The mortgage default rate in Canada could be over 1,000% higher as new data from Equifax has revealed some shocking facts. So let's get right into this data that has come from Equifax here, and we're going to go through it bit by bit, and you can see how this could be a huge problem for the financial system because the data just does not make sense, and the value of the loans is over $65 billion. So take a listen to this.
Loans, lines of credit, the average Canadian is carrying around $511 more than they were 12 months ago. These numbers keep going up, and as you mentioned, we are about to enter the holiday period where we definitely expect to see those balances continue to rise. And in many cases, consumers are likely to overstretch themselves during the holiday period. So come January, credit card missed payments typically rise around 7% compared to where we are right now. So, we are seeing younger consumers as well really still struggling. We know unemployment for that group has been up over the last 12 months. So, yeah, it's just a real difficult time as we enter the holiday period.
Yeah, I'm wondering if we can pop up that graphic again while I'll ask you this next question. As you mentioned, young people, 1 in 20 aged 18 to 35 are missing a credit card payment or a credit payment. Also, what's notable here is roughly 1 in 35 mortgage holders are missing a payment, Rebecca.
Yeah, absolutely. And that's actually gone up. So it was 1 in 37 kind of last time we issued our report. And what's really driving that is Ontario and British Columbia. We look at what's happening in the economy, we look at interest rates, and yes, they have come down. But when you start to think about your mortgage renewal, that is still creating payment shocks for people, particularly living in Ontario and British Columbia. And we are still seeing those missed payment levels rising.
So do you think the housing market is going to rebound with this on the horizon? But I want to show you this because it's completely insane. So the CBA, the Canadian Bankers Association, which only reports from these institutions, as you can see right here, and some of the data is actually excluded, but you can see there's around 5 million reported mortgages and the default rate is at 0.24%. That's what they say here. All the sources will obviously be linked below in the description, but you just heard that statistic that she said there. 1 in 35 missing a mortgage payment. Well, get this, calculate the total number of mortgages for Canada, then tell me what the default rate is if 1 in 35 are missing a mortgage payment. So I got Gemini to do the math here, and that comes out to a default rate of 2.86%, over 1,000% higher than the CBA is reporting.
You okay?
No.
Now, obviously, this includes all the mortgages from private lenders and MICs that are not included in the CBA data. And obviously, the default rates would be much higher from them. But there's obviously a major discrepancy there, isn't there? And I've said this and highlighted this before, that when you go back and look at the 1990s, again, you see the same thing. You see default rates reported that just don't make sense. The CBA is reporting default rates of around 0.5% back then in the 1990s crash. Meanwhile, the Globe and Mail is reporting a rate that is way higher. And we're seeing the exact same thing happen right now. You've got Equifax that is coming out and saying 1 in 35 are missing a mortgage payment.
Roughly 1 in 35 mortgage holders are missing a payment, Rebecca.
Yeah, absolutely. And that's actually gone up.
Not paying this back.
And all the data that is coming from the CBA is supplied from the Canadian banks, obviously. And maybe there is some loophole which is allowing them to make the rates look a lot lower than they actually are. We know power of sales in the GTA are absolutely exploding, as John Flynn reports every single month. And get this, based on the estimate of the average or median mortgage amount, how much in dollar terms would that 2.86% be? And that would actually be $65 $25.7 billion.
Oh, wow.
So this is where the plot really thickens. And obviously, I talked about 1,000%. I just want to be fully transparent here and show you where I got that number from, is because you're going from the CBA rate here of 0.24% to that 2.86% that we are talking about right here, the 2.86%. So that's how we got to that number. And then you look at the provisions for credit losses, guys. They're at $4.25 billion. And you've got over $65 billion potentially, we don't really know, that are in default right now.
That's not good, is it?
And this is the other shocking thing that you just have to see here. So here's all the loan loss provisions. Scotiabank actually has the highest here at over $1 billion, but this is down 27%. So a lot of the record earnings that you see at Canadian banks are actually because of credit loss provisions being reduced and then that money being took and put into their earnings.
I don't do math.
I mean, it's almost criminal, but that is what banksters do.
Yeah, let's say that.
And guess what? You've now got a bankster that is in charge of the country. It's no wonder it is such a mess. Just put those elbows up.
Elbows up. Elbows up.
I mean, it's absolutely crazy. You've got CIBC here, 559 million, just million. And when they quote these numbers, people think, wow, that's a lot of money. But it's all when you consider the massive amount of mortgages, over $2 trillion worth of mortgages.
Yeah, boy.
And again, we're seeing that default rates just are not matching up, and there's a lot of funny accounting tricks going on when it comes to earnings. So is the banking system really that stable? And have even the banks worked out that the default rate could be a lot higher? I mean, there's so much bureaucracy in these banks, you have to wonder, do they actually know what's going on in the real world? So Canadian mortgage arrears climbed to the highest since 2020. And again, this is the CBA rates here. But I want to show you the rate of growth here, because the rate of growth in arrears have exploded 63% since 2022. So there's been a massive explosion. The trend is clear here. It's just going up and up and up, and it's just going to continue up here. But you constantly hear that, oh, delinquency rates, they're actually quite low. Well, it's actually because of the reporting in Canada. It's just really not that accurate. It's just really not pooling data from all institutions, from also the credit agencies like Equifax and TransUnion. They're not using that data. They're just relying on the big chartered banks and what they give them, what they supply them in terms of the figures, and it's heavily behind actually. When you look at this, this is the mortgage arrears ending September 30th, 2025. We're in December right now. We're not even talking about October. We're not even talking about November. So again, this just goes to show the level of bureaucracy that is going on, because even the data that is reported is just so laggy. Whereas the data that comes from Equifax, they actually have more real-time data, and they can actually be showing what is really going on, the real reality of how many Canadians are losing their homes or gonna be losing their homes is a lot, and it continues to rise as the economy worsens here. It's not getting better, unfortunately.
And then that happens.
And then you've got the job market, obviously, which people rely on. If they lose a job, they got to find another job. And that is a total fucking disaster for those that are chucked into that depression and unfortunately lose a job. So a Scarborough worker with 4 years plus of IT experience hasn't had a single real interview in 5 months. EI is running out and panic is setting in. And this is a lot of people. A lot of people are finding themselves in this situation. And a lot of these people have homes and they have bills to pay, and EI isn't going to cut it. And it's really just a lifeline until you get that next job. And people aren't getting that next job. That is the biggest problem right now. If you find yourself unemployed, you just can't get that fucking job.
It'll be painful.
And that's the silent economic collapse that is going on right now. Please help me find any job in Ontario. I've been unsuccessful for the past year. I live in Scarborough and I've been on EI so far. It will run out in 3 months. I'm panicking because I haven't received a single call or interview in the past 5 months. I got some calls last year before I was laid off, but only because I was referred to by my manager and ex-colleague. And he said, other than scam calls, and again, I want to highlight, guys, because we actually went through this video because this really shows the reality of what's going on.
You know, the economy is cooked when these days, in order to scam people, scammers are pretending to be jobs.
There you go.
Yeah. You know, back in the days, it used to be, oh, you just won the lottery, or you won this amount of money, or you won a free phone. But now it's jobs.
So there you go. That really shows what's going on. The scammers are now posting Indeed ads. How many of the job postings are fake? I saw a figure in the United States last week that it could be 30% of job postings on Indeed are fake. So think about that. The JOLTS, the job openings for Canada and the United States, how fake are then those statistics that you see? So really not a good sign. And then you've got this other story here from Shazzy, posts great stuff on X. Grade 12, see it now. It is not a secret anymore. They are watching 2024 and 2025 grads with 3.8 GPAs and co-op terms and polished resumes get swallowed by a job market that is not hiring. Hundreds of applications, silence. Grads moving back home, working retail, driving Uber to keep the loan collectors away. So again, more and more people just cannot find jobs. So do you think you're going to see a lot of these young people that are heading into the housing market to buy homes when they can't even find a good job? And people are so close to being on the edge, yet they don't realize, because if they lose that job, then what's going to happen? Are they going to be able to find another one within the next 6 to 12 months? Are they going to be able to continue paying their massive mortgage? Because everybody's mortgage payments is going up in 2026.
It will take some sacrifices.
And guess what? People cannot afford it. How are they going to find that money to finance it? It's just going to be credit cards. And then I posted this story that I saw on Reddit as well. The Canadian dream is dead. The new reality, lifelong debt servitude. And we'll get to that in a second as well, because again, I've got to show you that reverse mortgage statement, because once again, it just shows where the Canadian economy is heading. Are you guys going into debt? How are people surviving? I don't get it. How are people surviving? I have a family of 4. My wife works at a hospital. I'm in construction. We have an average home, average life. Our bills in Canada, Ontario, are almost $6,000 a month. And basically, they're saying their mortgage is $2,200 a month, which is right now around average. Heat, hydro, water, cell phones, groceries, fuel, and kids' sports. We are exactly $6,000 a month. And this guy is asking, how do people hold it together? Well, I can tell you, just look at debt. Debt is how it's all held together. And that's how you can see the runway is running out on this thing, because you've just got people going more and more into debt.
And then that happens.
Even as Rebecca Oakes said right here, she said that more and more people are going to be ramping up spending in the holiday season, and then more and more people are going to be defaulting in January.
Consumers are likely to overstretch themselves during the holiday period. So come January, credit card missed payments typically rise.
Merry Christmas.
So it's like the Christmas hangover. So people are just going to ramp up spending, and you see the malls are busy, and you're just like, oh, the economy is doing great. It's just not. All the deals for everything are in January. They always are. And this is the reason. Black Friday is just a fucking scam, obviously. And then you've got the Canadian government coming out and saying about 40-year mortgages, discussing that they would pay 75% more interest with a 40-year mortgage, which is really interesting that they're even talking about 40-year mortgage. Maybe it's because Trump is talking about a 50-year mortgage, and there's a lot of buzz about that. But what people don't realize realize again is you only have to go to this amortization calculator right here. So you've got an average priced home here, $600,000, interest rate of 3%, which is low. You've got a term of 30 years, and the monthly payment here is $2,500. Now, if you pull this out to 40 years, I want you to watch what happens to this $310,000. It goes up $120,000. So you end up paying $430,000 in interest instead of $310,000, and over $1 million total for a home that's $600,000. And get this, your monthly payment, that actually goes down. And that's what they're trying to do here. They're trying to get the monthly payment down. But guess what? The banksters, they're going to win.
Our economy is very strong.
As more and more governments look ways to kick the can down the road instead of addressing major problems in the economy, they're going to look and say, hey, yeah, let's just do 40-year, 50-year mortgages. It's a future government that will have to fucking worry about that. And we'll be long gone. We'll be lapping it up. We'll probably be somewhere else because that's what they do. I mean, Trudeau is moving to LA probably soon to be with Katy Perry in that Hollywood relationship when he should be behind bars. And then you've got all the people that should be on trial like Christopher Freeland and Melanie Jolie, who are also jetting out of the Canadian Depression as well after they were the ones who orchestrated that depression.
Elbows up.
Elbows up.
And another thing I want to show you, if we put this up to 5%, because we know that over 40 years, saying that a mortgage rate is average going to be 3% is a joke. It will probably be way higher, especially with inflation. Well, let's see what happens here. So on that $600,000 home, now you're paying over $1.15 million, and this is over 30 years. You're paying $560,000 around that amount. So if I now put this out to 40 years, suddenly the amount you're paying in interest, it jumps to nearly $800,000. And you've got the amount you're paying for the house total, $1.4 million nearly. And that's total what you're going to pay. So you need the home to more than double in price just to break even over that 40 years. So you're going to need a massive amount of growth in the home. And do you think that's coming with what's happening to the housing market now?
The condominium market is absolutely dead right now.
And just look at countries like the UK, which haven't seen home prices grow in real terms, inflation adjusted, since 2008. But most people would believe that home prices are actually up. But if you look at what's actually happened with purchasing power, it has destroyed the housing market. So if you look at this home equity bank, once again, I just have to highlight this because this is showing you where it's all heading. 40-year mortgages, 50-year mortgages, and reverse mortgages. Can you see a theme here? Debt, debt, debt. That is all it's going to be for the majority of the people.
You okay?
No.
No wonder so many people are looking for the exit and they want out of this, because if they've got any brain cell left, they want out of these Western countries where the economies are just based entirely and solely on debt for 90% of the people in the economy, and the other 10% are just extremely wealthy, and those are the ones that are really enjoying a high-class lifestyle, and they just continue to eat up more and more of the wealth of the middle class, which is being hollowed out.
This is delicious.
So the bank is also well positioned for sustained growth as the Canadian population continues to age and looks to access the significant equity and savings in their home. And I think that's why they're really looking at these 40-year and 50-year mortgages. It's because they know that to bail out these people who have got no retirement, they have to increase the value of the homes. But guess what? If all this money is just printed out of thin air, then a loaf of bread will go from $5 to $20, as we've seen happen over the past 5 years. Everybody knows the whiplash of massive government spending is that, yeah, it's good for about a year, and then you pay for it for about 3 or 4 years after that with extremely high inflation, and it's just absolutely devastating. The middle class ultimately is the one that loses. And then Shazzy also posted this, which is what happened with the housing market across the GTA in November. And you can see here, sales, they're all down substantially, and so are prices. Detached prices here are down 8%. You've got sales off 15%. So once again, you've just got the housing market in Canada's biggest economy disintegrating. And you know what? I wanted to show you this. Toronto Star had a great article about home prices crashing, but guess what? I can't get access to it anymore. I tried different VPNs. I tried using different links and it just wouldn't work. I just could not get access. It seems like it's been took down. I don't know if it has been took down, but the article has gone. I'm going to leave the link in the description in case it comes back up, but I don't know what happened to that article from the Toronto Star. Maybe they took it down. But here's the shift that people aren't noticing. They're saying that immigration isn't political, but you've just got to look at the explosion here since the Liberals got in 2015. I think quite clearly they realized that immigration could make the difference in the future elections, and that's why they ramped it up so much and they changed the rules on citizenship so many more people could get passports and therefore vote, especially those brought in under Trudeau. And this is really completely changing the political landscape in Canada, and it will be a total disaster long term, because as more and more you're going to see rising sentiment against immigration. You see that happening in places like the UK, Europe, the United States, and also in Canada. But what that does is more and more then the immigrants start to equate like the Conservative Party, for instance, with against immigration versus the Liberal Party. So they lean towards that more. And guess what? Right now, you've got all the highly skilled immigrants that are leaving. So a lot of people are cheering, yay, immigrants are leaving. This is fantastic. But it's all the highly skilled ones.
The immigrants who are leaving the country are most educated and are most qualified.
And you're being left with all the Tim Hortons and the McDonald's workers, all the low skilled immigrants.
Hey, we'll be in Timbits, eh? What? Oh my God, yes!
And those are the ones that people actually want to go. So the young people can get those jobs that are low skilled at the bottom and they can get into the job market. So it's just a complete disaster that is unfolding in Canada. Little do people realize with the collapse of the immigration bubble, and it is driving more and more people towards the elbows up clowns. And I don't believe there is a major difference between the two political parties apart from some values, but other than that, they are pretty much similar. They'll just do things with a different facade like Donald Trump is doing in the United States. I mean, if you think the United States has changed much since Donald Trump got in charge, then you're obviously just staying in your echo chamber there, because it's obviously not the case.
A year and a half ago, we were a dead country. We were actually a dead country, and now we're the hottest country anywhere in the world.
But these are the people. These are the people. And it's just going to continue, unfortunately. These morons are just likely to continue as the demographics change and the political landscape just changes completely as well. And then obviously this happened, which is just another sign of the money that is wasted and just goes completely down the drain. And obviously this is taxpayer money. Algoma Steel, who received $500 million this year courtesy of Canadian taxpayers, is now laying off 1,000 workers. That will be devastating. Carney said when he was asked when he last talked to Trump, who cares?
Who cares?
I mean, I don't think he'll change his mind even if he didn't say that anyway. But here you've got it. Hopefully the workers at Algoma Steel didn't vote for the Liberals, because 1,000 layoff notices went out. And this is what was going on in the Canadian Houses of Parliament when this was discussed.
Mr. Speaker, today Algoma announced it's laying off 1,000 steel workers, nearly a third of its workforce.
Before Christmas.
Who cares?
Nearly a third of its workforce.
Before Christmas.
In the Sioux. Our thoughts are with them. Prime Minister looked them in the eye and promised he would protect their jobs, that he would negotiate a win, and I quote, have a deal by July 21st, but it was a bait and switch that is costing people their livelihoods. On top of that, Liberals are hammering the steel mill with a higher industrial carbon tax. Isn't it bad enough that the Prime Minister broke his promise on trade? Why is he going ahead with an industrial carbon tax that will kill even more steel jobs?
Who cares?
Thank you, Mr. Speaker. Obviously, our thoughts are with the workers affected by the unjustified and unjustifiable tariffs imposed by the White House.
One of the nastiest countries to deal with is Canada.
And she's eyeing up going to Paris now and getting out of the Canadian depression. I mean, it's hilarious, but it's sad because 1,000 people losing their jobs before Christmas. Absolutely terrible news, obviously. But the fact that so much money was sunk into this again, this is how money changes hands, and the Cantillon effect working right before your eyes there. I mean, I'm sure the CEO, I'm sure he's not taking a pay cut. I'm sure his lifestyle has not changed whatsoever. Meanwhile, the middle class, those are the people who take on the brunt of what is happening right now. And obviously, it's interesting. I mean, do you think it would have been much different under Pierre Poilievre? Do you think that Canada would have got a deal? I mean, I really don't think that Canada would have a deal because Trump is doing this all for optics. That is obvious to me.
One of the nastiest countries to deal with is Canada.
I think it would have definitely been better negotiating with the Conservatives in charge, but I don't think it would have changed the outcome because the reason why Donald Trump is doing this is all optics. You know, he's saying it's because to make America great again and it's going to bring back all this manufacturing and, you know, all these token promises that he gets. Again, those are all optics, even though they're complete bullshit, and they'll never materialize, and he'll probably be out and the next administration will be in by then. So, and then you've got this aged like crap. Good morning from Algoma Steel. This is April 25 when Mark Carney was there, and obviously now they're laying off 1,000 workers. Just absolutely insane. And then you've got this post by Maple Blooded, $35 just to make tacos for dinner. Young Canadians are begging for help. 10 years of Liberals did this, and voters are complicit. Take a listen to what this lady is saying here.
Can someone help me understand how it's $35 just to make tacos now? Like, I used to make tacos because it was like a meal you can make super cheap. I just went in the grocery store to only buy things I needed to make tacos, and it's $35. What the f*** is going on?
And there you go. What the fuck is going on? Exactly. People need to ask that because obviously purchasing power, you're seeing it just be wiped out. Obviously, you've got a Canadian dollar that is extremely weak. You've got inflation that is way higher than the government is reporting.
Elbows out. Elbows up.
But people are seeing the reality in what they can buy at the grocery store. And it's always actually a key indicator because what you buy at the grocery store obviously changes in price much faster. Canada doesn't have any competition when it comes to groceries. So the grocery store chains can just jack up prices as they wish when obviously their import prices change. They can just right away pass that on to the consumer because there's no competition. Where else are they really going to go? There's just Loblaws and Walmart in most places, and Loblaws owns so many of the chains, and then the other chains like Sobeys, for instance, they're even more expensive. So the only real value is you've got Walmart and then you've got Superstore. Those are the only two, and that's it.
Elbows out. Elbows up.
And you're seeing what is happening with food prices, and it's not good. That's why food bank usage has exploded, and so many people cannot afford food. And then you've got this from Mark Nixon. I thought the Canadian economy was the fastest growing in the G7.
Our economy is very strong.
And Canada has a AAA credit rating. And then you've got Melissa that posted Pulp Mill in BC is permanently shutting down. Devastating news for this community as this mill is also the municipality's single largest taxpayer. Very tough times in Canada. So you've got what's happening there. 350 people laid off. And obviously, like she says, the municipality's biggest taxpayer. So what do you think that means for property taxes in this area? So you've just got a disaster that is happening across Canada. The implosion and the suicide of a country is what Canadians are seeing right now. And it just leaves you speechless. Some of these stories on what is going on in the banking system. So anyway, guys, I want to thank you so much for watching this video. If you've enjoyed this video, please check out this video here. And if you're looking for a VPN and also want to help support the channel, get the best VPN, check out the link in the description below, expressvpn.com/marketmania. And I will see you in the next one. Take care.